All right, welcome panel. Obviously, infrastructure is very important to our economic growth, and I think the fact that we've come in at number 5 in the CEDA report, that just certainly verifies it, so we're off on to a good start. The fact that infrastructure is important to our economic growth is something I think we all agree on. We need it for attracting overseas investment, jobs growth, and most importantly, livability. But it seems to me, and where I'd like to start the panel off, is really the debate today seems to be around how we best use infrastructure to create economic growth. So the question now is not so much about whether to invest in infrastructure, but how best to invest in it and how best to fund it. And usefully, The Age yesterday in the editorial summarised the issue or raised some questions around the issue. So I quote, "Our rapidly growing population requires infrastructure, particularly roads and public transport, to ensure economic growth and quality of life. Federal and state governments ought to demonstrate long-term thinking. Investment in such vital transport projects not only stimulates the economy while they're being constructed, but also helps the nation, set the nation up for growth and prosperity over the long term." So while that's in the context of transport projects, I think that is relevant for all types of infrastructure. So I wanted to start the panel off really today talking about, are we making the best use of the opportunity to invest in infrastructure to stimulate economic growth? And Peter, I'm going to start with you. In 2014, the Productivity Commission released the inquiry into public infrastructure and your report. And one of the issues you focused on in that report was and I quote, that governments will have some capacity to fund more projects under current fiscal and debt management practices, provided the reform package in this report is implemented to ensure the selection of projects with strong net benefits. Now, in your view, do you think there have been enough improvements around the governance and selection of projects over the last few years?
No, I couldn't say that. I think there's been quite a lot of earnest talk and some nice publications which say the right thing, but in terms of actual on-the-ground implementation, it's quite hit and miss still as to whether or not the planning and selection of projects has been conducted wisely, and the generic shift that was behind that quote that you put forward was to suggest that if we had properly effective processes for design and ranking and selection of large infrastructure projects, then inherent in those decisions would be the decisions about where the funding and financing sources came from, including things like the pricing of infrastructure assets where they're capable of sustaining charges. And as a consequence of that, all other things being equal, which is what that quote was trying to say, you can expect to be able to borrow more because those revenue sources are going to support the projects, and overall you should see an increased investment level in infrastructure for no net drain on either taxpayers or private financiers, all through wise project selection. But I think what we have now is we have still inconsistent behaviour between the Commonwealth and the states on infrastructure investment. We have some improvement, I think, in tender contracting to try and simplify processes, but we've still got an obsession with fully financed bids rather than the preparedness to test whether the market or the public sector is better capable for the particular project of financing it. And we have every state now, I think, has a policy on unsolicited bids, but the implementation of those policies is still somewhat hit and miss. So overall, we put a structure forward in the report. We thought it was quite a pragmatic structure. It was written up the way the Productivity Commission writes things up in very intensive fashion to show that we've thought about just about everything you could possibly imagine. Sometimes that's a bit intimidating, but stripped away the overall structure, as a person who's done infrastructure projects both at Commonwealth and state levels in my past, I think it's entirely implementable, but it hasn't been.
And you talked a bit about the processes. What more can be done in relation to the processes? Is it the state-federal issue? Is it the inconsistent behaviour?
Well, I'm a huge supporter of transparency in the economic analysis that precedes or should precede the selection of projects. And while you hear from us a lot about cost-benefit analysis, and people do consider that to be somewhat remote in some cases, the point about this is if you design a cost-benefit analysis correctly and it comes out and tells you that you're not necessarily going to get a sufficiency of economic benefits to offset the cost, you should still then be able to proceed to the business case and work out whether the thing is capable of being financed by another party, and if it is being capable of being financed by a party, perhaps the public sector on behalf of some social benefits and the private sector on behalf of some capturable economic benefits, you can still proceed and make the argument publicly. And that's what I think doesn't happen. Mm-hmm. And you can apply that to just about any project, all of the sensitive ones, all of the ones where people say, isn't it outrageous this didn't get a proper hearing? And the answer is because it didn't have a proper process. That's the bottom line.
Why do you think it doesn't happen?
I think there's a lot of pressure on politicians to make an immediate announcement. I did a little speech last year where I talked about the terror of press releases. It's so important to get something out there into the public arena to say, see, we are a progressive government, we're investing in X. You're under pressure to do that. You put the press release out, you put a notional figure against it. As soon as that figure is exceeded, there's a budget blowout. Well, there's a big intimidation problem, but still over and over again it happens. The design work takes a hell of a long time after that, so there's this appearance that you've made an announcement and yet nothing happens for 18 months, and so it looks like, oh, that's delay and incompetence. And so every time there's a failure process by announcing first and then proceeding to do planning, you just add to the burden overall on politicians. They create it for themselves.
Brett, I might turn to you, just following from Peter's comments. And from a private sector perspective, how do you think we're going with choosing the right places to invest in infrastructure and making the most of our opportunities?
Well, from a private sector perspective, it's frankly a little frustrating. I mean, there is some good progress which has to be acknowledged in some parts of the country, so happy to do that. But all up, as a nation, we need growth, and everybody, I think, would nod their head in violent agreement with that. We've got limited options as to where and how that growth is going to come from. CEDA's report today talked again about the need to get to a balanced budget perspective, so governments are clearly going to be constrained in their ability to support and fund that growth. So the private sector is, particularly us representing, if you like, the superannuation system of this country and pension systems around the world, has been loud and clear in that we have a desire, a capacity and capital to invest more in the growth of this nation. Our challenge is that there has been limited opportunities for us to do that. I think everybody understands the economic rationale in the private sector, and in particular superannuation funds and funds managers like us, investing in infrastructure to drive growth at a time when things like resources booms continue to moderate. But we also recognise that there's a need to get the communities and the political hearts and minds behind this. So, we're trying to do our bit to help, provide case studies as to where communities have benefited, not just investors. And as I said, there is some progress, we acknowledge that, but having said that, I think there's an enormous amount more that has to be and can be done with the private sector's support. And
you've spoken before about the need for asset recycling or looking at that particular issue. Do you think there's been good progress in that area? I mean, it's early days of the asset recycling fund. Has that contributed positively?
Well, it has. I mean, in some states, Paul chairs one of those companies, New South Wales Ports. And, all jokes aside, that's provided the New South Wales government with $5.07 billion to invest in the state that now has the highest GSP growth of any state in the country, and has created more jobs than all of the nation combined. So it's clearly working. There is the asset recycling program was part of that. That asset recycling program is also being looked at globally. So when Australia hosted the G20 and B20, the then Federal Treasurer was advocating that globally, and I must say that around the globe there is increasing interest and preparedness to follow that model. Unfortunately, the recent budget stopped that, and there was 800 million that was still available. So that's a little disappointing that it has stopped, but having said that, it probably did start to change. It provided the incentive which changed the behaviour, and we're starting to see that momentum pick up. But again, I just can't stress enough, there is more capital than there is opportunity, so we'd like to see it continue.
Yeah, great. We'll come back to a little bit later how we unlock some of that. But Michelle, I'm interested in hearing a little bit about what Infrastructure Victoria are doing. I'm sure a lot of people are interested in where Infrastructure Victoria is at, because some of the issues that have already been touched on in terms of community views and educating the community and understanding what the community thinks and understanding, I guess, the nature of where we're at in terms of our infrastructure need in Victoria. Can you tell us a little bit about the status of where things are at with Infrastructure Victoria?
Absolutely. Well, it's certainly a very exciting time in Victoria with the creation of Infrastructure Victoria by Parliament Act late last year in October 2015. So Infrastructure Victoria is an independent statutory authority, and our focus this year in 2016 is in developing the 30-year infrastructure strategy. Now, this is going to be the first time that we're going to have a whole of state, and we stress upon that. It's also about regional Victoria. So a whole of state infrastructure planning across 9 sectors. We just don't cover transport, we cover health, education, tourism, environment, you name it. So where are we in that development? Well, we started by focusing on identifying the response to the question, what are the problems that we're going to focus on? Recognizing that there are lots of engineering solutions out there today looking desperately for a problem to solve in order to justify their existence and request for funding. So that's what we did for the laying the foundation phase with a lot of consultation. We are now right in the middle of the second stage of the consultation with the release a couple of weeks ago of our options paper. Now that we know what are the infrastructure challenges that we're going to focus on, we are looking at a whole host of ideas on how we are going to solve those challenges for the next 30 years. In doing so, we're very keen to focus on demand management. How do we optimize the existing assets? We think it's more important to answer the question, how do we make the most of what we currently have before we look at building new pieces of infrastructure? And this optimization of the existing assets has got 2 areas of focus. One, technology. You can't seriously look at the next 30 years without looking at the benefit of the Internet of Things, the big data, what the sensors are going to look like. And of course, the driverless cars is a little bit the elephant in the room as to, what the future will be. But we also think that in looking at the next 30 years, in how do we make the most of the existing assets, you've got to look at asset management. It's one thing, for instance, to know how many schools we'll need in the next 30 years. It's equally important to look at the way we maintain our existing assets to ensure that they continue to deliver the service. And let's remember, infrastructure is nothing more than one fundamental way to deliver a service to the community. So we will definitely be focusing on the technology and the asset management. Once this consultation phase on the options is being finalized, and they will be finalized in July, we will move to the draft strategy, which we'll release in September. And again, it will be another phase of consultation with the community, with the private sector, with the local government, in order to get us to the strategy, which will be tabled to Parliament at year end. Once the strategy is tabled to Parliament, and it will be released publicly exactly at the same time, the government has got 12 months to respond with the 5-year response plan. And if we do our work correctly, one can assume that our strategy will be a significant input into the next budget exercise. And this strategy will be refreshed every 3 years. Why? Because let's be clear, we don't know what will happen in the next 10, 20 years. But just because we haven't got a crystal ball doesn't mean that we should start planning for the future and providing you and the community with a long-term plan with short, medium, and long-term recommendations on not just shovel-ready projects, but also what are the policies and regulations that we need to look at in order to really make the most of the existing assets.
Right. And a big part of your strategy is obviously community consultation. Is that consultation, education, a mix of both? And why is that so important as part of the strategy?
having the community as part of the journey is absolutely fundamental. First of all, we were created by the community, by Parliament, and our existence is for the community. What we're very keen also to ensure is that this strategy which we develop and which will be tabled to Parliament, that we create a strong sense of ownership by having as much depth and breadth as possible so that Victorians feel that they've been part of that journey, that they've been part of that historical exercise of defining what future do we want collectively for the next 30 years. Another important point to take into consideration, and which explains why we've got that genuine engagement, organizing citizen juries in regional Victoria, in Melbourne, having roundtable. There is, as we speak, a roundtable with the private sector on financing and funding at Infrastructure Victoria, is that, let's be clear, we're going to have to make some difficult decisions. We're going to have some trade-offs to make. But the community understands that some trade-offs need to be made. But for that, we actually need to frame the information to really present things in such a way that when we table our strategy, which will necessarily have some trade-offs and pretty hard decisions, the community understands why we actually made the decisions we made. And remember that everything that we do is transparent and everything will be published so that everyone will be able to understand how this happened.
Thanks. Paul, in the CEDA report that's released today, there's comments about the need for transparent and consistent planning, and I think that's a theme that's come through from Peter and Michelle's work as well. Do you want to make some comments about that and how you see the process that Infrastructure Victoria are promoting undertaking as contributing to that?
Yes, I'd be happy to. There is a consistency, undoubtedly, in this group, as you would expect there to be. Excuse me. The report that CEDA, or the infrastructure section in the report, is all about transparency, it is all about rigour, it is all about making sure that there are clear cost effectiveness studies upon which decisions are made, and the community can be fully engaged to actually make the call as to whether they believe that that's viable. It talks about having to be innovative around funding. At the moment, a number of things are not happening which make it difficult to get a lot of projects funded through the private sector. If you had a more comprehensive road funding and road charging system, you would be able to more comprehensively look at road transport options. Because we largely don't have that, you're stuck with toll roads and they're limited. So there are a number of those issues where they're all related. You can't really broaden out a particular category unless you're willing to also look at some other changes. The other thing which we probably haven't mentioned is the report also talks about not just the building up of the case for a particular investment, but how it's rolled out and implemented. And in that, the report reminds everybody that there are significant challenges in the role that the federal government, state government and local governments are all playing in this space. And local government in many states is at sort of suboptimal level. Now that's a political judgment that I suppose is being debated even in the federal election rather bizarrely. But broadly, if you're talking about these larger infrastructure projects, then the state government in probably everywhere except Brisbane would really struggle to be able to be an equal partner in that process. So one of the other things that we're urging is that we really need not only the ability to develop up a business case, not only the ability to fund it, but the ability to actually roll it out and implement it. And one of the questions that I guess I heard from Peter's initial remarks is that we're in a rather strange point at the moment in this process where we're building up plans. His comments were, I think, of nice brochures and pictures. And they're necessary, and we all said, we want them, but of course, we're not quite sure what happens then. And there's a real danger that we will end up with some splendid pictures and no implementation. And then everyone will feel terribly disillusioned by the whole process.
Brett, I know you've got some strong views on how we can better maximise private sector investment in infrastructure projects. Building on some of the comments that others have made, what are your thoughts on that and suggestions around?
Oh, look, we'll just stay on message because we think it works, and that is that there's two models that we think that would better enable the private sector to invest. And it is a bit of a paradox because we as investors are looking for opportunities in an environment where I think I read the Financial Review this morning and they talked about a third of the bonds that are on issue are in negative interest rate territory, and the balance are very low. So what that means is the knock-on effect for investors is it's very difficult to find attractive risk-adjusted places to invest. So there's a paradox where investors have got now a multiple of GDP internationally to be able to deploy, not terribly attractive investment environments. Governments around the world have an enormous need to drive growth, but not the capacity to do so. So, we like to talk about the two case studies, if you like. One is the social privatisation. Now, we know that P word generates a whole lot of community angst, and we get that because there's been examples clearly where the community and the recipients have not necessarily benefited. But there is a different form of privatisation. We call it social privatisation, where long-term responsible investors actually, to the point that Michelle was making, look to improve the service provision of this core asset, whether it's a road or an airport or a seaport or a utility of some sort. So social privatisation is one model. Sales to long-term responsible investors where 100% of the proceeds are reinvested back into new economic social infrastructure that will benefit the communities that look to use these services. And the other model is, that's, if you like, for brownfields, and the other model is for greenfields, which is what we call the inverted bid model, where there's a collaboration between government, contractors and long-term financiers at outset, an agreement on the risk returns, an agreement on what those risk returns might well be within a range of, and then a sharing to enable, again, the long-term provision of the service to be up to community standards and for all of the parties to have an alignment of interest, and that therefore to be a better outcome for not just the communities but for the contractors, for the government and indeed for the financiers. So two models are the way in which we just like to see more of. Again, one of the things that we heard in the G20, B20, there's lots of large theoretical strategic things and brochures that go with us with these solutions, but practical, pragmatic applications of things are the way that we're going to bust through this. And those two models are, in our experience, practical, pragmatic, and they work for all of the stakeholders, not just the financiers.
And how do you move from the brochure to that pragmatic, practical implementation? You've got the ideas there. What do you need from government, from the bodies of the people on the stage with you? What is it that the private sector needs in that regard?
Oh, well, I think that the private sector, firstly, can't just sit here and say it's all everybody else's responsibility. We need you to do this, we need you to do that. We clearly have a role to help educate, communicate and get the support of the community, because if you get the support of the community, then you'll get the support of the elected officials, and then you'll get more of this activity underway. Yes, we do need things, but we also need to, as a participant, to arguably play a greater role in the education and the communication, and, as I said, acting responsibly, making sure that the airport that you buy actually gives rise to a better service experience, an increased GSP, a good relationship with the appropriate regulators, etc., etc. But then we then need the support of the governments to make these projects available. Like the Infrastructure Australia report a couple of years ago identified $200 billion worth of assets that are currently still held by local, state and federal governments. We need for there to be action in terms of making some of the opportunities to invest in those available.
Just following on from that, Peter, what's your view on what stops those opportunities and projects coming to market when there's seemingly a plethora of them?
Or ad hocery, mostly. There is a lack of structure. If you ask yourself, to whom would you propose this? Every state, as I mentioned earlier, has an unsolicited bid process, and I guess the Commonwealth has one too. I'm not sure. Maybe someone else will know that. Brett mentioned inverted bids, and we did look at them quite closely in our analysis, and there are ways in which you could make them work. They have risk factors of their own, but the generic answer to your question is no fundamental agreement exists between the Commonwealth and the states on infrastructure investment and how we will go about conducting ourselves. And in our report, we were pretty clear that this really probably is unlikely to be done as a sort of COAG one-size-fits-all agreement. It's almost certain to be the Commonwealth with each state jurisdiction varying the model to suit its own particular infrastructure focuses, its preparedness to take risks, the willingness it has. As you know, even now some states don't have toll roads, so there'll be parochial factors. But that structured understanding about how we will go about assessing projects, an insistence upon transparency, economic analysis first, business case to follow, a preparedness to entertain alternative solutions, a bit like I think Michelle was implying in the Infrastructure Victoria plan, that there are multiple ways of delivering this outcome. It doesn't have to be the model that we've come up with internally within the state. Perhaps someone else will have a different idea. Perhaps price will substitute for concrete in some cases and change the utilisation of the asset as a consequence. All of those things, we know them now. I haven't told anybody here anything that you haven't read previously in one of our reports or someone else's report. So we're all quite conscious of this, but the decision makers seem unable to reach across the table to each other and say, well, we should structure a process by which we're prepared to consider major infrastructure investment collectively. And that will give every proponent a place to go. Just today, some proponents are much better than other proponents at getting their alternatives considered by governments, and there are reasons for that. Reasons probably best for me not to speculate about, but they're certainly not driven by the existence of a commonly understood process.
Paul, do you want to comment on that process and how we can improve it, particularly from a federal state perspective?
Yeah, sure. And I do think that is the key joint point. There's a number of joint points that we've talked about today, but I think by far the most important is the federal system. Now, I think it's a joint point in health, and it's the joint point in some aspects of education too. So I think this runs right through the whole body politic. But certainly in infrastructure, when I was working in Canberra, federal money for infrastructure was largely around national roads. There was very little infrastructure funding from the federal government in urban areas. There was a clear, there was fudging going on, but broadly everyone had a pretty good idea. Feds funded the big roads and the states basically funded everything else, and then you had local government under that. That all fell to bits, and for the last 20 or 30 years, actually, there has been a shifting sands in relation to who has the responsibility for urban infrastructure. And urban infrastructure is not just road infrastructure, obviously, it's transport infrastructure particularly. And it's more in transport than anywhere else. Most of the other areas like water and so on, largely the states still hold on to that. But in this area, there is real confusion, and I think that if you are going to start to make this system better, it will be a subset of having another go at a redefinition of the respective roles of the Federation. CEDA did some really good work on that. It was their major piece of work about 2 years ago, I think, Stephen, and I think that still holds firm at the moment.
Just continuing on that theme, Michelle, what's the role for Infrastructure Victoria, or is there any role for Infrastructure Victoria in liaising with its sort of like counterpart bodies in other states and Infrastructure Australia, for example, on these issues?
So there is no direct link between Infrastructure Australia and the I bodies, as we call ourselves, between Infrastructure New South Wales, Infrastructure Victoria, Building Queensland and Infrastructure Tasmania. Having said that, we work closely together. We are very often on the telephone, helping each other, peer reviewing, what we are doing, and then we meet on a regular basis for some sort of informal, COAG, where we talk about, two things. One, who is working on what and how we can help each other. Value capture, for instance, is a typical topic which is being, looked at every single jurisdiction. The other thing also which we are discussing is the national projects. If I can take, the one that we looked at last time we met, the Inland Rail. So clearly the Inland Rail project, touches Queensland, New South Wales, and Victoria. So there is a lot of sense in talking together and said, okay, do we come up with a common approach or a common recommendation in respect of this? And to illustrate the lack of national framework, the Inland Rail, for instance, is the typical example of a solution to which it's difficult to answer to the question, what problem are we solving? And Infrastructure Australia rightly identified, the lack of national freight strategy, and we are, helping Infrastructure Australia in putting together a recommendation to, the new government. But this is typical of a solution that is looking for a problem, and there is absolutely no identification of what problem we're trying to solve at the level of Australia.
I'm glad you mentioned value capture. So moving on to sort of funding sources, that we hear a lot about value capture. We've talked a lot about it in these fora. We read about it all the time, and it means a range of different things to different people, and it's become almost a term like innovation that's there as a very broad term that covers a whole lot of potential funding sources. But Peter and Brett in particular, I'd be interested in your views on value capture opportunities and what you think are actually, in reality, the most likely sources of real value capture opportunities that we're going to see used in funding infrastructure investment.
You don't look like a halfback. You've just thrown me something out the back line. But the value capture, I think, I think broadly we're looking at different ways in which we can ensure that capital is available to support infrastructure. So anything that goes beyond, that adds to the complementary, the likelihood of complementary capital being forthcoming is a good idea. Because as I said earlier, the traditional capital providers are government. So whether it's private or an extension of that through value capture, I think it's a good idea. I think the challenge is the practical application and the implementation of it. So it's not to say that it shouldn't be explored, but we've clearly, being an owner of infrastructure assets in this country for now over 20 years, we can clearly point to examples where the adjacent areas, the value thereof has increased. And if we had been a little bit more foresight then, with Southern Cross Station down here in Victoria, Melbourne, that's a fundamentally improved customer experience. There's a lot more people going through it in a safer manner than ever, and it's been one of the contributing factors to the growth of that precinct, if you like. So that's a great case where a value capture mechanism probably could have worked to provide some complementary capital to over time invest in other and new infrastructure. So yes, I think the idea is a good one. It is complementary, and there are clearly examples where, had it been in place, it would have been worthwhile.
I think one of the matters that would have to be taken into account with value capture is the degree to which it is likely to become the substantive source or the core source of financing for a particular project. So you can envisage a value capture via, say, a levy on rates within a zone as being regulatorily induced and therefore capable of being turned into a revenue stream that a project could take into account. You could consider, though, that something like tax increment financing, which is an alternative, which basically depends upon an increase in a revenue-based activity within a zone, and a number of taxation authorities say, and I expect to benefit by X, and therefore I'm prepared to ante up money in advance, equivalent to X, as being a far less reliable source of financing for a project. And so I think it's incumbent upon those who advocate this to be quite explicit about what they have in mind. There are consequences that go beyond just the revenue stream, but I'll use the revenue stream as an example. And it's hard to envisage, a large infrastructure project where that is going to be the primary source of financing. So it does mean the complication of a number of financing sources for a particular project. And then the final factor to take into account is it's almost certainly a land-based project by definition. There's land involved because we're going to use rates, or we're going to use land tax, or we're going to use some other mechanism to obtain a revenue source. Well, they are controlled entirely by state and or local government. And so the Commonwealth, to the extent that it becomes the initiator of this, will have to determine some kind of contracting model it's happy with. And that alone can add quite a significant burden to a particular project. So I think it's an interesting mechanism. It will suit some particular circumstances. I think Paul mentioned earlier there are some local governments that could be quite good at this, and so it's a model where I think we have particularly competent local governments that could potentially be of value, but I think people should take into account its limitations as well.
Michelle, you've, through Infrastructure Victoria, your recent paper on funding and financing, you've looked at value capture options. Your thoughts on the benefits and disadvantages on some types?
So I would definitely echo some of the points that Peter made. We are going, Infrastructure Victoria, to release a research paper on value capture later on this year to support what we'll put on the strategy. And this research paper won't be just an additional paper that comes on top of the zillion trees which have been cut on the value capture. But we want to focus specifically what is there for Victoria, for the purpose of Victoria in light of the future projects. Recognizing that value capture makes sense. It absolutely makes sense to bridge the gap between the cost incurred in producing a piece of assets and who actually benefits from that piece of assets. And I think that there is a lot of discussion around value capture because it actually is something that intuitively we understand makes sense, and a bridge that needs to be built. It is a new source of funding which is important in these considerations of where do we find additional source of funding in order to put in front of the infrastructure, projects. And there's another aspect that I see as an advantage is that it forces to focus on value creation if you want to have something to capture. So within the community, to actually look at what are the benefits of the project that we're considering that can then, through certain mechanisms, transform into a source of funding is actually good. But it's absolutely true that there are some limitations. The biggest one, I would definitely agree with Peter, is that this is not the panacea. In other words, it is only one small aspect of covering the funding need for a specific project. And we'll never build a high-speed train between Melbourne and Sydney with the value capture, that's for sure. The other difficulty is that how do you define a beneficiary? And how do you define the boundaries? Is it 400 meters from a tram, line? Is it 500 meters, 600 meters? So this, needs definitely, to be looked at. And the last point, which I see, as a significant risk, is that it is a mean to an end. It's not an end per se. We should not lose sight of the fact that infrastructure is about delivering a service. In other words, when you plan for a new tram line, it should be planned according to where does it make sense to increase patronage and benefit the passengers and the customers, not where does it make sense to put the route in order to capitalize on the increase of the real estate value which we'll be able to capture.
Just moving on from value capture to another funding source, which is user pays, user charges. And there's been a few comments on the panel already today about road pricing. And I know, Peter, you've got some views on the use of road pricing or lack of. Do you want to talk a little bit about whether we're doing enough, what more we could be doing around that?
Of all the elements of our 2014 report, I think that was considered by basically write the editorials and the op-ed pieces to have been the most controversial. Curiously, it's got the widest active level of consideration across bureaucracies, and indeed with some large private parties who have an interest in this. And so there has been a continuous undercurrent of exchange about what might be important and how to go about implementing this on road pricing. And I think that's simply a reflection of everybody knows that it's the bleeding obvious, and that technology can now deliver this for you, whereas once upon a time this was a bit pie in the sky. A decade ago, even though we all had intelligent transport systems in our heads and imagined that we could do this, the reality now is with the technology that's inserted in an increasing number of vehicles, and will eventually, if ever the US car industry has its way, will become pretty much a bog standard technological item before 2020. You'll have the ability to choose and not choose to charge motor vehicles for the utilisation of roads. So technology is going to be available. The idea is sort of the bleeding obvious. It would certainly supplement an area where currently tax revenue is insufficient to meet our expectations for what we want of road infrastructure. There is an argument for congestion pricing that goes along with this. I'm a little less convinced by congestion pricing than some who argue for it. But there is a continuous undercurrent of interest in this. And the question, I think, is more one of which jurisdiction will be the primary catalyst. And I wouldn't say that it's beyond the capacity of an individual state to be a catalyst more than the Commonwealth. The model that we put forward in the 2014 report was very much based around the fact that, again, these will have to be state-based arrangements, and that if you do generate serious or important revenue from road pricing, it'll have to be hypothecated to continued investment in the infrastructure. And that brings the Commonwealth with its share of revenue into a model that effectively is controlled individually, state by state. So it does rather assist, I think, in a little part of solving vertical fiscal imbalance as well, because that says, at least in that area of infrastructure, would have an agreed funding pool. We call it a road fund for each jurisdiction. And indeed, you could do this by region too. You could do it in the southeast Queensland corner in particular, because the Brisbane City Council is a fairly competent authority. Anyway, there is a continuing level of interest in this. Where it breaks out, I don't know. And we at the Productivity Commission are not the government's policy development advisors, but we are asked from time to time for a bit more advice on something, and that tends to say to you, at least it's under consideration. So this idea is not a dead idea.
Paul, before I turn to the audience for some questions, did you want to make any comments on the use of user charges of road pricing?
Yes, well, certainly it was part of the COAG reform agenda, and when I was chairing the COAG Reform Council, that was one of the streams that was identified, and every now and then I used to get enthusiastic because it was one of the streams that actually did seem to be making some progress in looking at sort of, some uniform infrastructure that would be necessary for that to happen. I was always told, don't get too excited too early, because the transport industry is fairly formidable in slowing things down, and state transport infrastructures are known to fight for their patch pretty well. So there are balances in all of this, but I agree with you. I think that it's also going to be very difficult to get rail to play the full role that it should play without starting to deal with some of the costings around road and getting some level of greater neutrality between the two. So, and that's a huge issue. Our 30-year plan at NSW Ports, which is really trying to look at what the infrastructure in Sydney should look like. We must put about 3 million boxes onto rail to have any chance of not clogging up the town, and that's a huge increase. So those are the other things that I think are on our minds.
Thanks very much to our panel.